to the housing update for Southwest Florida, March 2025. Here with my very dear friend and cohort, Cheryl. Go ahead and introduce yourself, Cheryl.
I'm Cheryl Stokes with New American Funding.
And we're going to just dive into it because, Cheryl, I'm getting a lot of questions about pricing.
Yes.
Pricing in our area, but we're going to start, as usual, with the national numbers. And go ahead and read what Selma Hepp from CoreLogic is saying.
Yes, Selma is saying home prices have mostly been moving sideways starting in late summer through the end of 2024, a trend that may continue into the early months of 2025.
And we certainly saw that sideways because with the election year, which was anticipated, less sales. In our area, we had a few other things that were happening, and then we came into our high season, and we haven't seen that rebound yet. So if we look at this with Case-Shiller, and this particular graph is really talking about home price growth remains relatively flat, but it's month over month. So the last month they have on here, Cheryl, was 0.5%. November was 0.4%.
Right.
And on and on and on. They are small numbers comparatively to what we saw previously, but they are up.
They are up. It is growth. And, over time, growth changes.
Yeah.
And the good news is it's not negative growth. And
That's right.
That's really what we're looking for.
That's right. And if you look at really, the top 20 cities, metro areas, they go from the high. What is the high on this one? New York at 7.22%. Chicago, good for you, Chicago. You're 6.6% because they've been negative and really low for a long time.
Right.
But here in Florida, it's minus 1.1 and in Tampa. And then we have Miami, which is 3.28%. Not bad. Not bad. Growth.
And this just goes to show that it's regional and regions change depending on what's going on in their area.
Absolutely. Now, interesting, Case-Shiller does this again, and they're looking at this all the way back to January of 19 in month over month growth, which I think is interesting, Cheryl, when you look at, in 22, it was over 20%.
Right.
From the month before.
That's a lot. That's a lot.
Crazy. No, I lied. It's year over year. It's measuring year over year in a month to month.
Still crazy.
Still crazy.
Yes.
Still crazy with it being over 20%. But now if you look at where we are, in the last data that they have for this one is November of 24. We're kind of like back in line, would you say, with 2020?
2020 and 2019, if you look at that graph, the end of 2019, we're about maybe a little bit higher than that.
Yeah.
And I think about that all the time. I really think 2019 was the last normal year.
Yes.
And we're kind of back to normal.
Yeah. Normal's not bad.
Right.
Normal is not bad because we saw a lot of bad things that happened in those crazy years and good things. So what's our friends at Zillow saying?
So Zillow says prices are expected to rise this year, though most will do so more slowly than they did last year. Mm-hmm. Slower growth is good news for buyers who have locked in their budgets and are saving for down payments. And I totally agree with that.
I couldn't agree more. I'm with you 1,000%. Now, these the top average or the average of the top 23 analysts, financial institutions, et cetera, are saying that the home appreciation for 25 as of the end of February was anywhere from minus 2% up to almost 5%. But the average was at 2.7%. Again, modest, but
not a negative, and I think reasonable to expect.
Exactly. After coming off of the crazy time that we had.
Right.
Let's face it. Well, this is near and dear your part, and that is mortgage rates. So talk to me about what's happening in mortgage rates.
So mortgage rates have declined this year, and they have come down over the last couple of weeks. They are not where everyone had hoped they would be at this point in time, but they are on the decline. We're expecting a slow decline in rates.
Okay.
We're not going to have a fantastic drop that everyone jumps back in a day.
Yeah.
But if we have a continued slow decline, I think we'd be in good shape.
It makes me laugh because I swear for 2, maybe 3 years, we've been saying, it's around the corner. It's around the corner.
Right.
And now we're finally saying, I don't think it's around the corner.
We just can't say that anymore. We said that for 18 months, and I think the case presents itself that it's going to be a slow decline.
Yeah, exactly. So what does our friend Jessica Loutz at NAR saying?
So Jessica says this is the lowest rate for the 30-year fixed in 2 months, true, marking 6 consecutive weeks of rate declines. It results in a monthly savings of $60 on a $400,000 home, which represents a 20% decrease from when rates peaked recently at 7.04%. Is $60 a deal breaker for someone purchasing a home? She says perhaps not. I would say it can definitely be a deal breaker.
Okay.
However, it could influence a buyer's financial perspective, shifting from the mid-6 range instead of in the 7% rate. It's going to make them feel better about it. Ultimately, vibes rather than data could prevail. And I will say $60 can definitely, for a first-time buyer who's got a tight budget, $60 is a lot. So it can make a
you're
difference.
talking to my son, Matt, who is a first-time home buyer.
Yes.
And his numbers are very thin.
Right. And $60 can make or break a file. I've seen files as close as $10.
Yeah. Wow. $10. That's crazy. So what is Sam Cater saying?
The drop in mortgage rates combined with modestly improving inventory is an encouraging sign for consumers in the market to buy a home. And I think that's true as well. We have been saying for years, hop off the fence and get in now, hop off the fence and get in now because prices are going up. All true. But with prices now going up more slowly, rates starting to dip a little bit, it provides affordability and opportunity for some of those people that have just really been struggling to have the
Funds?
energy, the sign to say it's okay to jump off the fence.
Okay.
You know, they're very hesitant, and this might be the thing to get them to go forward.
I love that for our buyers out there that are in that category. You know, this is a crazy slide, Cheryl, and I'm going to let you discuss it because
It's very busy.
It's very busy. So go for it.
Let's just look at the side where it says a home purchase of $360,000. We were just talking about $60 a month, right? So at 7.5, there is your principal and interest payment, but at 7.25, it's approximately $60 less. And every quarter it goes down another $60. Well, if we get to the 6.5 range, $2,275, that is less than rent. So we're back to the point where it might be a better deal to buy than to rent. And we always know it's a better deal anyway because you're investing in equity. But this makes more sense to someone entering the market because it equates to what they're already paying.
Absolutely.
Really makes a big difference.
Well, she explained it really well because this is a busy chart, but you can really kind of go across. This is 440, purchase to 360 and kind of see where those rates are. Clearly, they'd want to call you, Cheryl, to really understand their personal situation.
Yes, because every client is different. And the thing to remember about rates is rates are just not what's advertised in the newspaper. It is property specific, occupancy specific, credit score specific, debt to income specific. So each individual really has their own rate.
Yeah. So something to keep note of. Business Insider, what are these guys saying?
If inflation continues slowing this year, we should see mortgage rates go down a little bit. Weaker economic growth could also help rates fall. True.
Good statement, Business Insider. But here we go. Rate of inflation ticked down in February. So we've been saying forever that we need the rate of inflation to be under 2%.
That's what they say.
And therefore, when we get that, interest rates are going to go down. So Cheryl, I'm looking at this graph and it says March of 21, we were under that 2% target.
We were.
And so rates have gone up since March of 21?
They have.
Yeah.
Yeah. They were down in 21, but people have to remember that end of 20 to beginning of 22 was an anomaly. None of those numbers made sense. If you look at traditional graphs, you want inflation to come down so you can get a lower rate.
Yeah. Well, I don't know. At 2.6, this is pretty good because the news right now is being meant to terrify, not clarify. And they are talking on mainstream news a lot about inflation and tariffs and everything else.
Yep.
Our economy is going to go upside down. Did it? Has it?
It hasn't so far.
Yeah.
So the question will be, how does it continue to trend?
Yeah.
But this seems as if it's trending in the right direction.
I love that. I love that. All right. So we have Joel Berner, who's chief senior economist at Realtor.com. Tell us what he's saying.
So Joel says, though mortgage rates have fallen over the past several weeks and look more promising to prospective homebuyers, we are far from the home finance environment of the post-pandemic home buying frenzy when rates were below 4%. And we are unlikely to return to that environment. And I wholeheartedly agree. And I frankly don't think we should return to that environment.
No, I don't know who I was talking with recently, but I'm going to bring it up again. What was your first home? What was the interest rate?
13.5%.
Right. I think mine was 14. And when I got a 10% on the next home, I was like, yeah, this is bonus.
Right. And 7%, which many people have right now, is
Right.
the 40-year average. So if you're getting in under 7%, you're beating the 40-year average. And in the sixes is affordable for just about everybody.
Love that. So that's where we are. We're in the sixes. That's wonderful. All right. So maybe I don't have enough money. Affordability is a
Right.
problem. What are some of the things I can do?
So there are alternative financing options that we can explore.
Okay.
And that, for the first-time home buyer right now, affordability is the key. We live in an area that is not very affordable.
Right.
So things that we can do are buy downs, seller concessions, down payment assistance, all of those things that help give that first-time buyer just a boost
Sure.
in getting qualified. And those things help make the whole process more affordable for them.
So if someone doesn't know what, a mortgage buy down is, tell us what that is.
So this is a pretty good explanation. It's a little more nuanced than that, but a mortgage buy down, also known as a mortgage rate buy down, involves paying an upfront fee in exchange for a lower mortgage interest rate.
Okay.
The rate can be either temporary or permanent, depending on the buy down type. Now, this is a really important thing. Everybody knows you can pay points to
Right.
buy down the rate. That is a flat fee. It buys down the rate for the entire life of the loan.
Okay.
And while that may help someone qualify, just like it said in an earlier slide, it's how they feel about what they're doing.
Right. It's a vibe.
They may qualify, but they're still afraid.
Okay.
So a temporary buy down, not an adjustable rate, but a temporary buy down allows them to lower their interest rate for, say, a 2-1 buy down, 2 years.
Okay.
They lower their rate by 2 points.
Okay.
They're still qualifying at the higher rate, but it feels better because they're paying less in that first year.
Yeah.
Then the second year, it goes up by a point, still not at that top rate.
Right.
And in year 3, they're back to the spot where they qualified to begin with. And maybe by that time, the rates are down and they can refinance.
Yeah.
But they feel better because they're locked in, can't ever go any higher, but they are paying at a lower amount for the first 2 years.
Okay. And so either the rates are going to go down in 2 years, or they're making more money, or they feel.
And if they go up, it doesn't matter because they're
Yeah.
locked in at that rate in the sixes. But if you think about it, if someone could get 6.875 today and they did a 2-1 buy down, they're paying at a rate of 4.875 for the first year,
Wow.
5.875 for the second year, and they're locked in at the 6.875.
I love that. So this is really something that you need to have a discussion with your realtor as they're putting
Yep.
together the contract, because we can ask for those concessions when
Yes.
we're putting the offers together,
Especially now because it's a seller's market, right?
especially now.
So this is a seller concession that is utilizing a way for you to pay less for 2 years.
Right. Right. That's wonderful. Now, this one talks about really our first-time home buyers. Are they looking for the mortgage rate buy down?
Well, they are. They're looking for help. They don't know that that's what they can do. So it really does become important that they talk to the realtor and they talk to their lender about what the options are. They are definitely looking for help in
Right.
getting themselves in the door.
I would agree with that. Again, case in point, my youngest son, who gets to talk to me at all different hours of the day. Love you, Matt. And is looking to buy.
Right.
He's come out of college and he's ready. So what is Lance Lambert saying
So
about ARMs?
Lance is saying about ARM products today that they're different from many of the products issued in the mid-2000s. We always all remember those. Before 2008, lenders often approved ARMs based on a borrower's ability to pay the initial lower interest rate, which was dangerous. And sometimes they didn't even check that. Remember the ninja loans. Today, adjustable rate borrowers are qualified on their ability to repay at the highest rate.
So I love that because you know what? I did have an arm when we moved
too.
here. And that was it was more before.
And if you're lucky, arms
but-
go down as the rates go down, but
Yeah.
they can just as easily go up, and you have to be able to cover that increase.
Yeah, exactly. So again, talking with the lender that understands that,
Yeah.
making sure you get the right product. This particular slide talks about really the share of people hoping to buy a home in the next 12 months is about 15%. You've seen on our graphs lately that the last couple where we said, here's what 2025 is going to be, and it's way above what happened in 2024. We're people are jumping back in.
They're hungry to buy. People
Yeah.
have been hanging off the market now for 2 years.
Yeah.
They're ready to buy.
So we're going to talk about here in Southwest Florida. And I like this slide. It's super busy, Cheryl. I'm sorry about that. But it looks at the median price that is averaged over a 12-month period. So you don't see the spikes in it. And then it shows it from, 2019 to current. And you'll see that the trend in every single market we have has gone up.
Mm-hmm.
If I look at just the year over year median price, from February 25 to January of 24, that would have been 12 months. Prices have gone up 38.1% at the high side on Marco.
Right.
Now Marco can, and this is a median, but it can sway that based on the low number of properties that are sold can really change
Skew it.
But a 4% in Naples overall. Fort Myers is flat and the Cape is, minus 2.8.
Yeah.
Little under, but not bad when you look at that. That's great news. When we talk about the side for our buyers, not necessarily our sellers, Cheryl, we're talking about, buyer's market. We're sitting here in Naples at 11 months and there's 12 months on Marco, which is just kind of crazy. I used to tell this story when I got into the business in 2010. I'm not that old that I got in
She was 14.
When I was in the 1800s. But when I got in the business in 2010, I'd laugh and say I could sell a house in the time it took me to have a baby because that's how much inventory we had and on the market. And if you look at Marco, it has 12 months. So that's the time to have a baby. But when I look at this one and I look at, okay, now what are my total showings per listing to get to a pending?
Yep.
And let's just pick one. The lowest one is Fort Myers. That is 9 showings to get to a pending, and that is down by 10% from a year ago. That's not bad.
Not
right?
bad.
Marco's a little bit up, but way down from Naples. Naples market is 9.3. That's down 21.2%. Now, shows per listing. I like to give this out to my sellers because if we're not getting showings, then we got a price issue.
Right.
Like with our marketing plan, the only thing I'm testing is price. So this says for every listing in the month of February, that it needed 3 showings that month. And if we got more than that, then we were doing pretty good. If we got less than that, we needed to do something with the price. The market's rejecting our price.
So let me ask, if you're getting 3 showings a month and it takes 9 showings to sell it, so that's 3 months. That's kind of what we're saying on the
That's
time to sell.
exactly what we're saying.
Yep.
So when you look at homes for sale, again, this chart is kind of busy, but what it shows is this cyclical average of when we start to go up with actual, new opportunities on the market, when we peak out and when we come back down. Some of that is they sell, we're getting ready for season when all the people are here. Up north, it's a summer market. Here, we're January to Easter. So now the other thing, Cheryl, is days on market and a median. When I look at this and I say, okay, let's just take Marco Island, for example, 12 months to sell a house. That's how many months of inventory we have. But my days on market is 71. That tells me that if I get that price right in the first 70 some odd days, I'm probably going to sell. Otherwise, I might languish on the market.
Right.
So the point we need to do is we really need to look at those pricing. If you've been sitting on the market, and you're not sure, you can certainly, when that expires or whatever you do with your listing, talk to somebody else, because I submit that you probably have a pricing issue. And there's a lot of agents out there that want to price too high.
A pricing issue and an understanding that today's market is not 2021, and you might have to, as a seller, negotiate.
Right. Exactly. But if we don't get people walking through the front door, it's pretty hard to get
negotiate.
An offer.
Exactly.
Negotiate. So having said that, Cheryl, we always end this with, is it time to move?
Yes.
Yes, it is time to move.
I actually think it's a great time to move. I always say yes. But because of the affordability, because the rates are dropping a little bit, because we have all kinds of tools to help those people get in the door, I think it's a great time to move.
Yeah. Cheryl's a pro at that. She seems to time the market incredibly well. I have a client I was with, Cheryl, yesterday that has moved 32 times. 32. Wow. That is crazy. They're experts at it. And we've helped them. This would be the third time we're helping them in our market do that. And I will tell you that at the end of the day, you move for your reasons. If you need more space, less space, kids, grandkids, get closer to somebody, get further from somebody. I don't know, the breakup with a divorce, et cetera, whatever that is, it's your reason. But we're here to help you through whatever the market is, whether it's right now a buyer's market or if it changes again. We at the Bartos Group and
at New American Funding
are here to help you. So until next time, Mary Bartos
and Cheryl Stokes.